May profits be upon you. We're going to talk about gold in the middles. All right. Now, listen, I need you to be patient. I need you to be patient with this setup. Why? Because everything depends on what is going to happen on Friday. And that would be, doggone it. I can just get it. All right. Speed that up. All right. Speed it up again. Let's see if I can do it again. All right. That would be the FOMC. All right. We have the FOMC coming on Wednesday, and that's going to be pivotal. All right. Will the Fed raise the rates 75 basis points or 100? If they raise it 75 basis points, you can expect some weakness. You can expect some weakness to come to the US dollar, which would mean some strength in the in gold. All right. And but if they surprise people and make 100 basis point, which is, circulating in those policy circles, that would be a little bit surprising, and it would see a boost in the US dollar, strengthening it, and you'll see the opposite happen with gold. So wait, be patient, let this setup develop, and just be reactionary. Don't be predicting anything, just react. Okay, let's take a look from the top down. We're going to go to the monthly. I want you to see something in the monthly. Okay, one, you see how bullish this market has been, right? And where we reach all-time highs up here, right? And I just wanted you to see that this was very bullish. We broke structure to the upside, and this establishes the trading range from the swing low to the swing high, right? This is the 50%. We're still in premium price. This is where you want to take shorts. This is where you want to take longs. In the discount area, you want to take longs. And we have not come out of premium yet. We're on our way, though. You see how bearish that is. That's looking pretty heavy, isn't it? Okay, let's go to the weekly and take that view. The weekly says, yeah, we're bearish. And the thing was, I've been tracking gold in this area here. These lows were finally broken. When we broke this low and started trading below it, it was pivotal. It shows that this is a very, very weak market, and we're coming down into this demand area here on the weekly. All right, and just to give you a quick look at it, the demand looks like so, and there is an imbalance in between where price is right now and where this demand starts. So we could fill that imbalance, and price could come down here further. And I'm actually looking towards that as a target, all right, which is 1632.69. Okay. But that's a little further away. All right. Right now, price is trying to fill this fair value gap. We're already in it. We're already in it. You understand? All right. And inside of that is a daily zone. Let's take a look at that daily zone, shall we? And here's the daily zone here. If we look at it from this side, you can see it was pretty well formed, right? Had a little sweep to a sweep of liquidity to make it, and we broke some highs to demonstrate the strength here, and that this is prices finally traded back into this zone, but we haven't gotten to the extreme of the zone. You got it? We haven't gotten to the extreme of the zone. So we still have some imbalance to fulfill in as far as I'm concerned, all right, on the daily time frame. So you see what we're passing right now is those lows, right? And we have a significant break of structure here to the downside, a pullback, and then bam, we break that significant swing low on the daily. All right, this is a swing low on the daily. Okay, and when you break swing lows, you got to expect some kind of pullback, and that's where we're going to take a look at. We're going to take a look at it on the 4-hour, but you can see that what I want you to see is this was a demand zone that was broken. And what do I look for when we break demand zones? I look for supply zone that is responsible for it. We have a gray zone here. We got a gray zone here. Let's take a closer look at those zones on the 4-hour. All right, here's the broken demand. And this, because it's broken, it loses its blue and turns a little pinkish, right? So it's actually red, very light red. Right? And here's our demand that's inside of the zone. I don't usually like that. I like to see the reaction to a zone and then the break, and then price come back and retest that supply that is responsible for breaking that demand. All right. But it's not usually inside the zone. It's usually right above it, or on the upper side of it. But this one is interesting to me because it did show the reaction here. The reaction here actually had a reaction here, right? And you can see the reaction to this zone, which led to higher highs, and price reacted here and came down. All right, so that's why I have two zones here. All right, because price could break this one and seek this one. There's a little imbalance leading up into this one, but this one had imbalance that was just closed. So I know price may find some reaction there, and we may see, let me get something right. We may see price round over in this zone. Could we see a lift? This bull flag, this bearish flag, be completed within the zone is very possible, because I'm looking for price to do something like that leading up into FOMC. All right, and just remember, I don't want to be taking I don't want to take sells in discount. I want to take sales from premium, but we've come from premium down into discount in this bearish leg of structure. All right, this is a 4-hour leg, and I want to see if we're expecting a pullback. Now I'm looking for that pullback to happen here. If price gives me my entry model, all right, if I get the 15-minute confirmations that price wants to head back down in here, all right, I'm looking for this formation to happen here inside this zone on the 15-minute. Not going to be that big, of course. All right, but I'm looking for that. That's my entry model, right? If I can draw it a little smaller, that looks more sensible, right? I'm looking for this to happen. Sorry. I'm looking for this to happen here or here if it breaks this zone. Okay. But I am definitely looking to take that low. So that will be my target for the week ahead. This zone looks like it may hold price. All right. We're going to look to see how price reacts, how price acts leading up into Wednesday for the FOMC. All right. Again, if the 75 basis point hike takes place, I feel that we may see some strength into the gold market. If there is a 100 basis point raise, then the US dollar will drag gold down. All right. And we could see that lower, remember, we can see the lows. We can see price hit this low and break this zone. All right. And that low is at 1640. Okay. So that's what I'm looking at. All right. Be careful with this. Make sure you don't jump into anything. I'm looking for the price action on the 15-minute. I'm looking for a confirmation, a break of structure on the 15-minute before I look for my entry on the 1. All right. We have a broken zone here. All right. A flip zone. And this is the flip that I'm looking at. All right. If it breaks this one, I'm looking here. All right. And we'll see how it all goes. I'll hit that like button, man. Hit that like button if you like this setup, if you like the analysis. And do make sure you hit the subscribe. Tell your friend. All right. Let me know that you told your friend. All right. I would love to talk to you about it. Talk to you, you know, just to say, hey, man, I appreciate that, you know. And see us down at Lions Den Effects. All right. It's free to join the premium Discord right now. All right. We're doing a membership drive, so check us out. I'll see you in the next video. Thank you very much for watching.